Hey, this is Fernando with H&G. I want us to talk about the big elephant in the room. Is the market going to crash in 2025? We don't know. But we can tell you what I know based on my investments today. We are investing every day. We are looking for properties, investing as much as we can. Regardless of where the market sits, we keep focused and keep doing what we do. We are investors in the state of New Jersey, and our state is okay. It's doing okay in what we talk about the market. And Florida is going, in some places in Florida, it's coming down. And we're going to talk about why. Why in some states it's higher, why in some states it's a little bit cooling off, and why in some states it's still climbing up. So the question is the housing market going to crash? Well, we'll see. So now we're going to tell you what we're doing currently in your company. So in H&G Golden Contractors, we're still buying properties as we speak. We're still buying rentals. We're still buying fix and flips. We are actually building homes, which in my opinion, they're a little more profitable because you're able to expect what's going to be the final outcome. And also you can get better on what's going to be your investment. So, when you're doing your budgets and you're doing a new construction, you can actually see what's going to be the final investment. So let's go back to the topic. Is the housing market going to crash? I believe is doing a correction right now, which is sustainable. So after 2019 COVID era, everybody could work from home and people were getting paid more money to work from home. So people from New York and other states started moving to other states because they could afford it. So in New York, the market is high, really high. So if you live in New York, you're paying a mortgage that's substantial, $8,000, $9,000, $10,000. By moving to another state and still be able to work from home, you were able to afford it and live a better lifestyle. So those little details started driving the market up. And also the government printing money all the time and giving everybody money was also driving the market up. So right now we are hitting what I call sustainable. So before we head into the question, is the housing market going to crash in 2025 is similar as 2008, let's dive into it. So in 2008, the housing market did crash because the banking system was lending to everybody that could prove income. And today's date is a little bit different. And do we believe that it's going to happen again? Do we believe that 2025 will be another 2008? We don't believe so. I believe that the market's actually correcting itself. That in 2019, when we had COVID-19 and people were moving out of New York and taking their incomes that they were making in New York to live in New York, which is a very high market over there, and people making a lot of money, but everything is very expensive over there. We're moving out of New York to be able to afford a better lifestyle. So right now, what I believe is happening is that the market is actually correcting itself. Today, people that were doing that were moving out of New York and other places to be able to afford different lifestyle, now they're set. So now the market is actually correcting itself. I don't believe we're heading into another bubble. And today we are actually investing in many real estate properties. We have single family home. We just bought a 3-family unit. So we have to make sure that we are all signal and cap the noise. And I was reading this in a book by Patrick David, and it makes a lot of sense. If you actually let external things dictate your final outcome, it's going to definitely prevent you from keep walking on the direction that you have to head, that you're heading. So if you want to keep investing and you want to keep moving forward, just keep doing so. I said all signal and no noise is look at your final outcome. If you're going to make an investment, make sure you do the proper research, that you know what's going to be your ARV, that you're going to be, if it's going to be a property that you're going to flip, if it's going to be a rental, you can treat it a little differently and make your numbers a little different. And create your cap. And if at your cap, you're at 1.5% of the entire investment, you might be okay. And this is why I'm telling you this is not going to crash in 2025. In 2025, right now, on today's date, we are actually having a market correction where inflation and the Fed increase interest rates to cool off inflation. Also, that's cooling off or the housing market. And when I say cooling off, it's not getting rid of the housing market, it's making sure that people has less purchasing power. And we can dive in on other things, like in New Jersey, for example. If you look it up right now, in New Jersey, it's still strong. We still have a good housing market versus Florida that's cooling off because Florida was low inventory for the past 10 years. And now they have a lot of inventory and people are moving out of Florida. In New Jersey, which is the state that I invest right now, and it's not the best state to invest due to high prices and taxes and other things, but it's still a strong market. There's areas that is doing a rapid correction where the housing is sitting more than usual. For example, 2 years ago, I would put a house on the market, put it for sale. I will have it offer within the first 5 days. Plus, I would have 2-3 people making offers for these properties all the time. Now, we built a few properties. We also built and rehab. We built a few properties and we have a couple that we rehabbed and we're sitting for a week, 2 weeks, 3 weeks to see the first offer. Before, our phones wouldn't stop showing us how many people or booking showings to go see the properties. Now you're lucky if you see 2, 3, 4, 5 going to the property. But that tells you that it's just the market is going on a correction form. So what we're doing right now is when the market stabilizes, there's going to be more people that's going to be able to afford and good qualified people to buy the houses. Today, I believe that if you get scared, you're going to pull off the market. You're not going to do the investments. But yesterday, I went to see 3 showings, for example. And in those 3 showings that I went to see, there's going to be 3 investment properties. I was talking to my realtor about what would you think is the right offer to make? They're B properties. They're not A properties, they're B properties. And he responded, well, you know, they have it listed for 175,000, at least the one that we were talking about. And we made a decision to make an offer for $110,000. Do we believe they're going to take the offer right away? Do I know they're going to take the offer? Yes. Since the housing market, it's actually making a correction. It's making a correction for everybody. That means even us as investors. So if you have a lot of inventory, then it could hurt you a little bit to sit on the inventory for some time. But as you get rid of that inventory and you bring new inventory in, that inventory is going to be, you're going to buy it at a lower price. And that's going to be really good for you because you make money when you buy low, you sit in it, you hold it, and then you sell it later. You can still do the flips. If you buy the house right, you can still do the flips. I made flips where I bought at 90,000. I put 70, 80,000 into it, sold for 290,000, and we made a phenomenal amount of money. But it's because we made our due diligence if we kept doing the right decisions. So where I'm going with this is, no, I don't think the housing market's going to crash. I think the correction is going to be a little dramatic for people like us that might have quite a bit of inventory. So what we're doing is we're actually doing more due diligence. We're going into the market and we're looking at not 90-day sales on the area. We're looking sales that happened within 30 days. So we will know what our ARV is. So once we look at our ARV and we go and we are able to look at the comps for the entire area on 30 days, we would know how much we can offer for this house based on the amount of work that we have to put into it and the amount of money. So what I'm saying is, if you're trying to still be in the housing market, if you're trying to be an investor, if you're trying to buy a house, go ahead, buy that house. Go ahead, keep investing. Just because you think that things are not right, you don't stop investing. Because if you lose momentum, it's going to take a lot for you to catch up. And also, for the people that are looking for houses, waiting for the Fed to drop points for them to buy the house, it's a mistake. If you could afford a house right now on a house that has let's say a $400,000 price point, you could afford it at this rate. That means that when the Fed drops the interest 2 points, you could do a refi. You only need most lenders take about 3 months, maximum 6 months, and you can actually do a refi into your property again. And even though you have to do closing and you have to do new paperwork again, it doesn't really come out of your pocket. It goes on the top of whatever you're gonna owe, but you're gonna get a lower interest rate. So don't wait for what's gonna happen tomorrow to try to buy what you need today. Go buy your property today. And investors, if you're looking for properties and you're waiting for the right property to come, it's gonna be hard. You have to just do your own due diligence on the area where you're trying to work, where you're trying to invest your money. Make sure that investment is gonna worthwhile for you, and make your offer. And it doesn't matter if it's a low offer. We make low offers all the time, and I'm gonna tell you a few of them. At the beginning of the year, we went to buy a property that it was 2 properties side to side, and we decided to make a very low offer. And this offer consisted, we had a lot of contingencies to the offers, and we're gonna explain what were the contingencies on it. So both houses were listed for $500,000. 500. We actually offered for one house $225,000 and $1 for the one next to it. We did a report so we can give it to the sellers so they would know, why do we think this houses are worth $1 and why do we think the other one was worth $225,000. Did they take the offer right away? No, but 99% of the time, if you know what you're doing, they're not going to get a better offer later on. They're going to hold on the property, they're going to keep paying taxes, they might even lose the property if they're losing the property if they don't take your offer. So there's a big chance that they might not say yes on that minute, but they were going to come back to you. So they came back to us and they accepted our offer, where we deeded one property for $1. So that was phenomenal. So we end up investing $125,000 into the one, and then $45,000 into the dollar house. We kept the dollar house and sold the other house for 400 and, if I remember correctly, it was 450,000 or 430,000. We didn't make a killing, but we did clear our numbers. We did make money on that one, but the real money we made it on the $1 house. On the $1 house, we actually end up refinancing the property, and we refi for the appraisal was for 225,000, and we refi 65% out of it. So we got $129,000 out of it. So we made a phenomenal profit from both of these properties. So what I'm telling you is, make sure you do your assessments. Make sure you go in and make sure you do low offers. Those low offers might not be accepted, but if you do plenty of them, you're gonna get one. And that one is gonna bring you your numbers. I don't believe the market's gonna crash like I said before, is because I know the market's making a correction. And the correction, it's needed. We can't keep increasing the home prices because nobody is gonna be able to afford it. So 90% of the people today state they can only afford a $325,000 home. That's the average home price in the United States right now. If we keep increasing the prices, not many people would be able to afford these homes. So the correction is needed for us to be able to have better sales later on. So when inflation cool off and all the prices come back down to normal, and we end up buying more properties even now. You keep buying properties, making low offers, buying properties. If you can, keeping 1 or 2, 3, if you can, refi 1, 2, 3. When the market makes the correction and you end up with 5 or 6 properties in your portfolio, 10 properties in your portfolio, let's say you want to sell them down the road, you're gonna make a phenomenal amount of money. So it's very important that you end up just making your due diligence, keep moving forward, making those connections. One of the things that I tell everybody when I have discussions with my realtors or other investors that invest into area or rehabs or new builds is that we just have to invest smart, invest in areas that have the value, invest in areas that are going up. And you can look at charts today on Redfin. You can look at charts today in Zillow. I actually just look at charts today on Redfin for my area. So my area, it's cooling off. So I am trying to invest on the areas. The Redfin is saying that there's more buyers than houses. So I live about an hour and a half from Newark, New Jersey. And if you go right now on the charts and you look on the charts for Redfin and you pull the report, it tells you that in Newark, New Jersey, that there is more buyers than houses. And the average home price in Newark, New Jersey is $500,000. So now we're investing money to go into that market, to go into the market that's doing better, that's not cooling off, because it's human nature. But that also is going to dry off. Once that dries off, it's going to do their own correction as well. So we have many tools at our disposal today that we could go to. We could go to Redfin, we could go to Zillow. We can pull reports from our area and it would tell you how the market's doing in those areas. And then you can make an educated decision if you want to keep the property or if you want to sell the property. Right now, I think that the rental market, it's phenomenal. It's better than if you were to buy a house. So people are looking to rent and rents are increasing. So right now, what I'm thinking to do is to buy at least 10 rental properties before the end of the year. And we're gonna keep trying to add to that. Not only we're adding, but you have to look at the long haul. One of my mistakes, and I can tell you this, that one of my mistakes was that I was not keeping any properties. I was buying, rehabbing, selling. I was building, selling. I wasn't keeping any. So I was missing out on generational wealth. Whether the market's going off, whether the market's doing a correction, you need to keep doing what you're doing. If you want to buy, buy. If you want to keep, keep. My opinion is right now that I am going to keep buying and keeping rentals. And that doesn't give you a lot of rents. If you buy a single family home, it doesn't give you the same amount of rents if you buy a multifamily. But we do have single family and we do have multifamily. And I can tell you that we're looking at the whole long haul. So in 5, 6, 7, 8 years, those properties are going to increase their value by a lot. Plus we got 25% of the equity in the property still, because we only refi right now 70 to 75% for single family and 65% for multifamily. So you have equity and down the road you can sell. So right now with the market making a correction to, I don't believe we're going into a house market crash. I don't believe we're going to see a big difference. I believe that we're going to see a very big correction. I think that you should be outside hustling, making offers and pushing low offers. Not everybody's going to take it, but if you put 20 offers and if you have a realtor that doesn't care to be working along with you and pushing the offers, you're going to land those houses that are going to create generational wealth. And you make money on that, on a market that's cooling off, not on a market that's hot. And a market that's hot, everybody wants to sell high. So today is the time to keep doing what you want to do. Don't think that the market's going to crash. I don't believe it will. And like I said before, in 2008, everyone could get a mortgage. Today, the guidelines that they're using, they're way different for people to afford a mortgage. And those guidelines that were made were there in place to protect the market from what happened in 2008. So if you go online right now and you read what was happening in 2008, it's not happening today. What's happening today with the correction, it's the fluctuation between a lot of people hitting the market, not enough housing in the market, and that drove the price up. And now, by having inflation and the Fed increasing the interest rate, we're having a correction. So if you ask me if I want to be in a high peak or on a peak that's actually corrected, I want to be on the corrected, because if you're in a high peak, you could buy a lot of properties on that high. And then when it's in the correction, you can lose a lot of money in that correction. So if you ask me, I want to do the low offers. I want to be out there and I want to be hustling and I want to be pushing them, but I want to make sure that I am thinking ahead on that correction that's coming, that line that's going to come, and or average home price has to come low. And if you read what happened with the big beautiful bill and all this other stuff, they're trying to push the housing to be more affordable. They're trying to open more land for people to build more houses so they can make affordable housing again. So we already know that that's going to be part of the correction. So now we don't want to be in the peak. You don't want to be buying a lot of properties in the peak. You want to be buying where the correction is going to happen, so you're in the safe zone. So if you're doing investments right now, you just need to keep putting your offers, making sure that you know your numbers in and your numbers out, knowing your ARV and knowing your area, what sold in 30 days. And then you have to see if it's going to take you 30 days to rehab the property, 40 days, a month, 2 months, so you can make a prediction based on what we know is happening of where you would be, and make your offer current to that, to your situation or what's happening in the market at the time. But don't try to be scared. Don't be scared. Don't pull off. Don't keep moving forward, and make sure that you make the right decisions to be able to make your money, even when it's high, when you're going to make the most amount of money, or also on the correction. So like I said before, this is Fernando from H&G. I hope that what we spoke in this segment helps you. And if you have any questions, please send us an email or try to reach out. We will do our best to get back to you with any questions you may have. We're also going to show you a lot of the properties that we're investing today, so you see that what we're saying is the truth. Keep doing your thing, faith over fear, keep moving forward.